Hello and welcome to this episode of the Independent Dealer Podcast. This week we are speaking with Jasen Rice. We cornered him in, owner, operator of Lot Pop, inventory consulting, all things. This episode is great. It's super timely. We talk everything about auction pricing, how to price your cars strategically and psychologically. We talk about how many you should be buying based on your sales cycle. Luke.
I'll tell you, this is great information. 2-week sales cycle. That's what everybody needs to look at and go to google.com/trends and see what's going on in the market because it's there. It's great. Jason, thanks for the advice and thanks for being with us.
Thank you.
You are listening to the Independent Dealer Podcast with hosts Luke Godwin and Jeff Watson. Thank you so much for tuning in. Let's do this.
All right, Jasen, thank you again so much for being here. Let's just get into it. Tell me a little bit. You're the guy, you've got your pulse on the used car market, the supply of inventory, things like that. Give me kind of your overall, your 10,000 foot view. What do you see happening out there in the wholesale markets? All I hear is dealers just, prices are too high, prices are too high, prices are too high. Is that the new normal? Or do you think this is kind of a blip?
Yeah, I mean, I think guys are getting excited, there's been good traffic, either led by lack of new car availability and new car sales or stimulus money or things like that, but or downtime some people happen to have. And so dealerships, and I find this happen pretty much yearly. The traditional trends would be January, basically February, March, and a little bit of April were the peak seasons. Half of April, and by mid-April, spring hits, things start shutting down a little bit. May and June slows down. So the traditional sales cycles and shopper was always kind of by mid-February, things were really busy. March was great, and that lasts till about mid-April in a 60-day window. Then it starts slowing down. And what we found was a lot of guys end of March and the beginning of April were still buying in bulk and paying top money for these cars. And then come into April, going into May or June sometimes, depending on seasonal and where that market is, all of a sudden these guys are left holding the bag when the market's shipped. And they're like, man, somebody shut the faucet off. So we're seeing that, but it's transitioned forward a bit in time because a lot of people were shut down March and April and a little bit of May and stuff. So we're just seeing that now. So guys are, and so our dealerships, we always tell them to start slowing down about beginning of mid-April to not overbuy, over anxious, because we know the market shift and when it was coming. And we'll stay steady to their sale rate. That was real important. We look at what they're carrying to what they're selling. Carrying 100, we're selling 100 plus. So if your sales cycle's still running in the last 2 weeks, we look at a 2-week sale rate, then we go back and we continue to fill that void and buy. If not, if it's slowing down, then we slow down with it. So I think that's what we're seeing right now is guys still had strong months, and really things are starting to slow down. Shopper counts, if you look at like Google Trends and typed in used cars, the shopper counts down, volumes down. If you look at like Car Global stats, volumes down, but the big difference is, and what I like about the Car Global, it's KAR, Car Global, they have a used car dashboard, and you can look at each state, is even though sales are down, inventory listing levels are down. So there's still a seller's market where we can ask more. So dealers' grosses are good. They're able to ask a little bit more for cars, even though they're selling less. So that's where I think they think, because sales are down, man, if I just had more cars, I could sell more cars, which maybe could happen. And so that's why everybody's, running this lane, trying to, and driving up that demand. And at some point in time, this bubble's going to burst.
Yeah, Jason, that's my fear, that we're all out here, not all of us, but, if we're trying to get inventory, it feels like we're paying, out the book. We're paying almost retail for products that we know should be $4,000 to $5,000 less than what we're paying. How can a dealer know, or how can we know when that bubble is going to burst? I mean, is there something that could lead us to that direction?
Well, I was just on a call this morning with a dealership, and the dealer's always involved in the call, and there's about 8 or 10 other team members there, and we're changing prices. And while we're changing prices, the dealer was buying some cars. He's like, hey guys, since we've done a few price changes, I already bought 6 cars. So I asked him, and of course he couldn't really tell me, but my question is, well, is it becoming easier to buy? And so is that a kind of a red flag? All of a sudden you're able to start buying more than you're typically. So does that mean things are slowing down and guys aren't running to the lane? So I'd watch, that availability and seeing if it's getting a little, and I've seen a couple Facebook posts, guys saying, hey guys, yeah, it's still tough right now, but you're starting to be able to buy cars. Okay. Right. And if you really hunt for them. So once you start seeing those, that kind of cycle on top of your 2-week sale rate dropping off, one of the things, I put a quote out today because I heard it in a podcast about Warren Buffett. He says, be greedy when others are fearful and be fearful when others are greedy. So if guys are still up there at the lane, I'd be a little bit, and it's stepping all over, I'd be a little bit fearful. Yeah. But as soon as things start, you want to be a buyer at the, just like stock market. If it crashes, you want to be the one with cash so you can start buying it because it's coming back up, right?
Yeah.
So you always want to be a buyer at current market positions. I think that's the cycle we're running into right now. If I was a dealership, and again, maybe I typically sell 100 and I'm really only selling 90, but my inventory's clean. I'm making good gross. Instead of pushing it and trying to get back to 100 or more and thinking you're missing this bubble, I just stay at my current clean pace. Because here's the thing, we know winter months, and if you think about it, what I would call winter months is October. You're only less than 60 days from October. If you have a 60-day supply, or we try to have a 30-day supply, but I'm just saying, the next 45 days, you better be lean and clean. And this winter is probably going to be worse than what they always been, because we got an election in November too. You got to throw into that mix. So,
Jasen, that's interesting. I guess you're a 12-turn guy. Is that where you want to be all the time?
Well, and I want to make sure, I want to make this clear. Gross and volume is possible. Okay. So yes. So I'm not talking about just sheer volume, drop your price, move the inventory, make it up with volume. Yes. If I got 100, we're selling 100, but we do that with gross. And what we push is what we call first 30. I got little wristbands we give the dealers, say first 30. What I found over the years, it's been 15 years now helping dealers, the dealers that have gross and volume, they do 60 to 70% of their sales in the first 30 days. We all know the biggest gross potential on a car, because it's typically a depreciating asset. I say typically because cars are holding pretty strong right now, but it's a depreciating asset. And we know the best time to make the most money is when it's fresh. So if you just increase the amount of fresh cars you sell, your gross is going to come.
Yeah.
So we can't have age, to do 60. And what I like about when we push first 30 is it's a trickle down effect, because in order to get 60 to 70% of your sales in the first 30 days, you can't have 30, 40% of your inventory aged, because it won't happen. Then if you got to get 60 to 70% of your sales in the first 30 days, you got to get your turnaround time, your transportation, your service, your photos, detail, all that's got to be humming, and buying cycles, so it's kind of focusing on first 30, trying to get 60, at least 50, but 60 to 70% of your sales in the first 30 days, that forces you to focus downhill on all these other things.
Hey, Jasen, I've noticed that I'd like to be at 9-turn. That's where I like to be. I feel comfortable with that. And the buy here, pay here space, I think it's a little different, and you can get too fast. But in the last 90 days, I've been 12-turn, and I've gotten to this point where I'm selling more cars than I can stock. Yep. And is there a point where a dealer can get too fast? It sounds like you say that, and do you see people getting too fast right now on there?
Now I want to clarify, when I'm talking about turn, it's not like a lot of guys use systems like vAuto, Max Digital and stuff, and those systems use your average age as your turn number.
Yeah.
Okay, so if your average age is 30, then you're turning 12 times, but that's not the case. Because that means you got 50 in stock, you're selling 50. Well, no, most guys, there's 50 in stock, they're 12 turn. Because I can fluctuate that number by going and buying 10 fresh 1-day-old car. All of a sudden I go from 12 turns, because my average age is 30. I go, let's say I have 50 cars. I go buy 10 tonight, throw in 10 1-day-old cars into my inventory. Well, my average age just dropped from 30 down to 25. Now my turn goes from 12 to 14, and I look like a champ. But that's not the case. So when I talk turn, It's actual, if you got 50, sell 50, what I call sold turn. We do a lot ready turn also. I'm going to not only look at if we got 50 in stock, but how many are fully photoed ready for sale turn. So if I have 50 in stock, I might only have 35 fully photoed ready for sale. And so what am I turning there? So a lot of dealers might have 50 in stock, but selling 40 and go, well, shit, I'm not selling my 50. Well, if you only have 35 fully photoed for sale and you're selling 40, you're still turning your lot ready 13 times. The difference is, you need to get your pictures done, right? You need to get your photos done. So you got a turnaround time problem. So anyways, when I talk turn, it's that. So yes, at some point in time, I think once you get to that 18 to 20 range, you're turning too fast. So when you do that, you got one of two things. You can either raise your prices because you're too cheap, or you throw more inventory at it. My bet's usually let's throw more inventory at it. Because other than maybe your buy here, pay here, where you can maybe raise your pricing, but because again, you're not worried about online displaying and being $2,000 higher than everybody else and no one calling you or emailing you. If you've got foot traffic and you're putting them on cars, you might be able to do it that way.
But right now, it'd be hard to throw more inventory at the problem right this second. So, are you advising people to up prices when you see this or not?
Well, the hard part is the bank calls too, right? I mean, you can only raise it so much if you got to, answer to a bank and an approval number. So then you got to either have cash down, which probably may or may not happen with, the stimulus money and things like that. But are you finding with your buy here, pay here, is it easier to get cash down?
Yeah. I mean, we probably had the best 5-month run of down payment we've ever had. How about you, Jeff?
Yeah, it's been good. And I know we all know Luke sells his cars too cheap. So that's, we've covered that in podcasts in the past. So that might be the silver bullet for you, Luke. Charge what you should be charging. And speaking of, Jason, I know I saw a video you posted a little while ago. If you guys don't follow Jason, do it, because he puts out a bunch of great stuff on this. But tell me your pricing strategy. Can we cover that just real quick? I mean, I don't know if that's,
well,
it's not traditional, right? Because it's not what I do. And when I watched your video, I was like, man, that makes a lot of sense.
You mean like flat pricing, the 20 grand stuff? Yeah. So, it was almost, what was it? It was probably 2000. It's been about 9-10 years ago. When I was with Viato, I was teaching a dealer. He had a car like at 12.2. And I was like, man, let's put this thing down to 11.9 because we're missing anybody going online saying, hey, I want a car, but I don't want to spend more than 12 grand. So being at 12.2, he was missing somebody capping out at 12. I told him to go to 11.9. And then I stopped myself and said, hold on, what if we put it at 12 grand even? He's like, what are you talking about? I said, well, if we put it at 12,000 even, we might get the guy looking 12 or less, but we also might get the shopper looking 12 to 15 or something like that. So he says, you think it works? I'm like, I don't know. So we started playing with a handful of his cars. We put a 999 car to 10 grand. We put a 11.9 to 12 and 14.9 to 15 grand. And we played with a few cars. Then I started doing research on like pricing strategies. And I come to find out, I'm like, man, we're more of a marketing person than a used car manager now. To traditional used car manager, you think of closer and somebody that's meeting and greeting and putting them in cars and closing them. Right now we just need to, as a used car manager, expose our cars to as many people as possible. That's why we bought cars in the busiest, our lot is usually on the busiest intersection of town, so we got the drive-by traffic. So my job now is to get that car in front of anybody. So what we found was, and so I started researching marketing strategies and pricing strategies, find things like buy one, get one free, buy one, get one half off, things like that. And then what we do is what we call psychological pricing. 9999, we want them to psychologically round down. They say in the stats about 50% of people round down. The rest of the people are smart enough and round up and say it's 10 grand and not 999. Anyways, so we do psychological pricing. I think it costs us gross. One, I'll explain that in a minute, why it does. But two, people don't, 999 works on radio, print, TV. If somebody sees my ad in the print, they go, oh, 9 grand. Mm-hmm. If they hear it, 999, it works. But if they go online, which people do now, and they end up on some of these sites, even your own website, but let's say you are an Auto Trader, Cars.com, Car Gurus, or any of these other sites, they might shop 10 to 15 grand. If they don't see your 999 car, so it doesn't work anymore. All right. So you're out of the bucket. So by pricing it at 10 grand, you do get the person that says, hey, I want a car, but I can't spend more than 10. But boom, there you are. Just like the 999 person. But then you also get the person that says, hey, I want a car, but I know I want something decent, so I want to spend 10 to 15. You're there too. Sometimes that car performs better for the 10 and higher shopper, because when they go 10 to 15, they might sort low to high and you get better exposure. So you're going to maximize your exposure, get your cars in front of many people as possible by doing it. One, the other reason why I think it costs you gross is think about 999. The reason why we do that is people to mentally round down. They're going to think 9. All right, so think of your first pencil. You go at 999 plus doc plus taxes plus negative equity. Your first pencil might be 11,273, and they go, "Oh shit, what's that?"
Yeah,
that's way too high.
I thought I was a 9.
Yeah, and they go, and I go, "Well, what are you thinking, folks?" Well, I was thinking 9. Can I really go to them and say, "Well, where'd you come up with that number?"
Yeah,
I psychologically set you up.
right.
So, if you put it at 10 and they go, well, I was thinking 9, I could say, well, where'd you get that number? Well, I found cheaper ones out there. Oh, you mean the one for 9,995 that's blue instead of black? Can I match this price and earn your business? You got ways to at least overcome that.
Mm-hmm.
So I think psychological pricing costs us gross when you think about that pencil. And then 2, you're going to maximize exposure. So to me, I wouldn't price cars any other way.
I was sitting in 20 group. This has been 5 or 6 years ago, and Joe Lascoda was arguing with all of us about the 999 or 99.95, whatever that logic was, and he said the exact same thing. You're costing yourself gross. He said, I want everybody to go home and raise your prices $5 or $1, whatever it is, to get to that even number. And it's really hard for car dealers to figure that out. I can't imagine what you went through when you first tried to do this, but if you actually think about it, it works great.
Yeah, and so we did. So I've been doing car sales since '97. I was doing internet sales since '97 and '98. So I was selling cars off the internet, and so I was always counting myself as somebody stays ahead of the curve. And I blew my mind. I'm like, how this is so easy. How did no one think about this? And so I ran to Dale Pollock, who's the founder of Auto. I went to our VP. I'm like, you got to understand what I just figured out here, because after we did a handful of cars for that one dealership, the next month we transferred all his cars over to flat pricing, because it was half a month of June that we played with some cars. The whole month of July, we flipped everything to flat pricing, and his SRPs and VDPs is quadrupled. I mean, went from 100 per car to 300 per car. And we're like, holy crap. How did no one think about this? So simple. So Auto did a study. We started actually introducing it to some dealers, and yeah, they validated through Auto Trader, because back then Auto Trader just acquired us, and we're running through all those stats, and it was validated that it works. Again, just go do it. And then the other thing, go do this. Go look at private sellers. Think about this. So we 9995, like you said, it's a 100-year-old strategy. I got old ads in here from magazines showing how we priced cars at $29.95 when they first, back in the day. Mm-hmm. It's just an old strategy. It's hard to overcome. And so, yeah, it's ingrained in us. But think about this. Now people shop online, and they're going to say, especially during a recession, they're very budget oriented. They're going to say, hey, I only got $8,000. I only got $250 a month. So what does that buy me? It buys me, 8 to 10 grand. So they're going to look very budget wise by their money. We talk that way. Hey, when's the last time you appraised a car for $9,995, right? So, hey, I got a 10 grand trade. I'll sell you mine for 15, right? So we talk that way. We appraise that way. And if you go look at private sellers, go to Craigslist, go to Auto Trader. And I'll tell you, about at least 60% of private sellers put their own car price at like a flat number, within $500 ranges, usually 6,500, $7,000, 85. So people price their own cars that way. We talk that way. They search that way. So why are we holding on to a 100-year-old strategy?
So I know you talked about this a second ago about the difference in somebody searching from 10 grand and up. How much of an overlap did you see from the people shopping or getting, if you price your car at $10,000, how many more people how many more views did your car get because of that?
Oh, back when we first started this, thousands. I can show you charts where they had maybe maybe 100 SRPs on that car. And I mean, we had 130-day-old cars at $9,995 or a truck, and we raised it $5 to 20 grand. It went from like 100 SRPs to like 900 SRPs per day.
Wow.
And so but that was back before, when these sites algorithms were, the default search was price high to low. So back then, if somebody did say 10 to 15 and I was at 15 grand, I was above the 14,999. And then anybody said 15 to 20 grand and sorted it low to, so now they do different algorithms, like, the best matches and most relevant or best deals. So you don't see as huge of a spike due to those algorithms, but people do search by price point, so it's still relevant if you get what I mean. Before it really just, it blew up. I got charts. Yeah, some of these cars and so the car that was 150 days old, we raised it $5. It sold in 7 days. And that's what I found out, that 1995 car did better for the 20 and higher than the 20 and lower on some cars, unless you're miling. Because get it, the person that says, hey, I want to buy a truck, but I can't spend more than 20 grand. Well, even at 19,995 or 20 grand, I'm at the very top of their budget. They might click on the car, but they go, oh man, nice truck, but it's still at the top of my budget. If they can find an 18 or 17 grander, they're going to buy that one instead, because 20 is the top. But that other person that says, hey, I'll spend 20 to 25 grand, and they look low to high, and I got decent miles, boom, then it buys. And I prove that. I have charts from a real estate agent that prices their houses flat. He went from 150 grand house, had a ton of searches, had a ton of appointments. He dropped it 5 grand to 145, and his searches dropped, his appointments dropped, because again, the people that said, hey, I don't want to spend more than 150 grand on a house, 145 was still right up there at the top of the budget. He missed the 150 to 200 shopper, the 150 to 175 shopper. So yeah, it's one thing to hear about the strategy and debate it. It's another thing to understand it. 22 grand works on Car Gurus and Auto Trader. It doesn't work on Cars.com. 25 grand works great on Cars.com, maybe not Car Gurus, but also Auto Trader. So it depends on what sites you're listening at and the frequencies of the numbers and what works where. So you start moving. Yeah. It's a deeper dive than just a flat price.
Hey, everybody. Sorry to interrupt the podcast, but Luke and I, we've been working on the Independent Dealer podcast for probably 2 years. We finally strong-armed a company into being our sponsor, which means we can keep putting this episode out. We can push it to more dealers. Luke can find a phone that doesn't sound like that and film an ad. And we got Dealery to sign up with us. Luke, who's Dealery?
Dealery is my reinsurance provider, and they should be yours. And I know they're yours as well, Jeff. I've been with Dealery since 2011. And let me tell you, there's no finer people out there than Taylor Bird and Tim Bird and just the whole company. They've taken care of me. And I've said this before, Jeff, but the number one best decision I made in the car business is starting my reinsurance company.
Yep. Listen to episode 19. We get into reinsurance pretty deep, and call the birds over at Dealery.
Sounds good.
Luke, here we are back to the episode.
What you said something about, and I brought this up a couple of times lately about transportation and how, that has to be filtered into your, how long it takes to get your car ready. What have you seen dealers lately doing to, I guess, thinking outside the box to get cars transported? Because that's been a real issue for a lot of dealers.
Sorry, taking a drink. I think they're buying more local. So to overcome that, I had that problem. I bought a lease in a Volvo, and I bought it from one of our clients who's not in state. He had to do a locate, which was out of state. And the car was supposed to come on a Sunday. Then it got moved to a Monday. Then it got moved to a Wednesday. And so that was very frustrating. So I always said wholesale was it's a national, because guys would buy in Chicago, would buy in Florida, the guys in Florida buy in Texas, the guys in Texas would be buying in North Carolina, So The wholesale market was national and even global. People from Russia's buying black Mercedes and shipping them over there, so wholesale was always a national to global market. Well, with the internet it was. And retail was more local market, if not regional, meaning, no one's driving 4 hours for Focus, but they'll drive, 4, 5, 6 hours for that hard to come by, Mustang, Cobra, whatever. So it's local, regional at best. And so what happened, and guys would go to the lane in Kansas City buying cars and they're 10 grand. You're like, I can't sell this for 10 grand. Who the hell is paying for this? Well, it's the guy in New York that can sell it for 13. By the time he transports, he owns, he can. So he's driving up your local market. So what you're buying at the lane is irrelevant to what you can sell at your local market. So now I think that shift is happening for a little bit because, guys are realizing because they're becoming more efficient. Like you said, you used to turn 9, now you're turning 12. You're becoming more efficient. So you're finding, oh crap, I need to get these cars turned around faster. Shoot, they're selling before I even get them on the lot. So those cracks in the pavement are being exposed now. And so, well, I can't go buy in New York now because it's going to take me 2 weeks just to get the car. And shit, by the time I do that, it's going to be 30 days old and I need the car now. So I'm just going to buy local. And so that transition is going to happen, and it may happen for the next, and it has been happening for the next few months, and it probably will. And that's another reason why I think guys are making it's tougher for people to buy cars. And that's why it's making it easier for these bigger companies to do it, because they'll do it.
They don't care. They'll just pay whatever. Yeah.
And plus when you go, hey, I got 100 cars for you transport company to pick up, you're going to get bumped on the list a little bit maybe. And, you're going to get taken care of a little bit better than somebody.
I feel like for me, one of the best, kind of canary in the coal mines is those institutional buyers, right? Those guys, the scarecrows that are just in the lane paying anything for cars. Those decisions come down from corporate, right? So you have 500, buyers, CarMax, Carvana, CarHop, JD Buyrider, all those guys that you see bidding against each other and pushing those prices up. They get the corporate signal to buy. They also get the corporate signal to not buy or to ease up. And it seems like so many of those guys probably use the same philosophy and strategies. They see Google searches going down. They see their sales going down. They see lot traffic reducing. They see their, inventory starting to swell. And so they kind of pull those reins in all together. Is that, kind of what we can gauge on?
Now, here's what I see, because you got the Carvanas, and who's the newest one that just went public, like Vroom or something like that.
Vroom.
There's another one coming I think it's called Shift or something like that, that's going to try to go public because they see the demand. And here's the thing. These companies accept a loss. They're new. They're innovative. They're think everybody can, Carvana's not going to last. They keep losing money. They're fine with, I'm a business owner. I know sometimes I'm going to try to break even or lose a little because I'm reinvesting in the company. And when I'm trying to satisfy investors, they want to see growth. They're fine with losing money because it's just launching. So they're fine to pay 95 or 100% price to market. They don't care because they'll take the losses because they're trying to satisfy showing that they can gain market share. So they're not going away, and they're not going away with putting their hands down anytime soon either, because they're fine with driving up. So as more and more of these companies come public, they need inventory, and they're fine with losses because they're going to take it and try to make it up on F&I or somewhere else and go, hey guys, we lost 10 million this year, but we grew 40% in sales. Oh, okay. So there's a business here. We just got to figure out that shift. And until that normalizes, which will be years, it's not going to, that's why I tell dealers, they're not going away. So either you stop complaining about having
Wall
to pay
Street shuts them off.
Yeah. So either you got to shut up. One, make sure your appraisal process, if you're a new car franchise, it's a little bit easier to say this, but make sure your appraisal process is right, making sure you're fine-tuned with everything you're doing internally to acquire cars, by private sellers to service lane to appraisals on new car deals. Make that right before you bitch about the lane. And then two, don't buy it then. Don't pay too much and let somebody else sell the freaking car, because they will. Right. And they'll gobble you up, and they don't care. It's like Walmart. If you're a little mom and pop and Walmart moves down the street, you better make adjustments or you're out of business soon. Yeah. And either you buy more product and be more competitive with your price, or Walmart's stealing your business. So, as soon as a Carvana, a CarMax, or any of these, and then you got the big, large dealer groups like the Auto Nations and Sonics and everybody else, they're still they can stretch and fight with those guys because, they'll have algorithms and say, hey, I know we had to pay up, but it moves better in Texas, so move these batch over there, and then move these to Chicago, and then move these down to Florida, and then they'll just cycle cars through. So the smaller guys, it's going to be a tough battle because they're not going away.
Great. Jason, what can you say, what can you tell us right now that we should be doing to wrap this thing up? What should dealers be doing to price their cars right when they have to pay too much? What should we be doing right now?
Well, I mean, that's easy for me to say. It's easier for me to say because we watch this data daily when we look at dealers' inventory. So I would look at a 2-week sales cycle and stocking strategy. Don't look 30 and 45-day metrics. Think about it. In mid-April, in the middle of a shutdown, if you're trying to stock for your inventory during a shutdown, you look 45 days ago going, hey, we sold 100 cars 45 days ago. Let's keep buying. Well, no, you're in the middle of a shutdown. Same thing happened now. Even though your volume is moving up and you're back to selling 100 cars, if you're starting to drop off, don't look 45 days ago because you're booming 45 days ago, even though we're going in a slower. So look at 2-week sales cycles. We do a 2-week sales cycle, then average it out for the month. So if I sold 10 in 2 weeks, that's 20. Okay, so I got 30 in stock. And so either I need to increase my sales or decrease it. And then I got to make a price adjustments based off of that. So if my price is high and I'm still selling, I sold 20 in 2 weeks, I got 40 in stock. So I sold 20 in 2 weeks, 40 in stock. I'm on pace to sell 40. My price is high. I'm fine. All of a sudden, if my 2-week sales rates start dropping off, maybe I got to drop my price to catch, to get it back going again. So that's where I'm going to watch shopper count. I'm going to watch, again, you can go to google.com/trends, type it, used cars, and see how many people are going to Google looking for used cars. If you got Auto Trader, you can look at shopper counts there and see if there's less shoppers in the market. What I like about looking at Google versus Auto Trader, like if they do Auto Trader decides to do a big marketing campaign and advertise a lot, they might get an uptick in shoppers to their site. Doesn't mean there's more people shopping. They just seen their ad and moved. So I like going to Google. And what's cool about Google Trends, you can pick out your state and even down to counties and stuff and say, look at Michigan. Okay, that's down. Well, let me look at Detroit and see how Detroit's moving. So if I'm looking at 2-week sales cycles, I'm going to look at if I'm increasing or decreasing sales. If my sales are moving up, then I'm fine with my pricing. If it's slowing down, make adjustments and get the cars moving, but also be picky and choosy on which cars. Again, I was just on a meeting call. The ones with the bad wheels are not the big touch screen, or things like that. The wrong color combo, get aggressive. The right ones, the right trades, right equipment, maybe hold out.
Well, cool. Well, thank you so much, Jason.
Yeah, Jason, if dealers want to get a hold of you, learn more about this, how do we get in touch with you? Where are you at? Are you on Facebook, Instagram, LinkedIn?
Yeah, a ton of stuff. So, like you said earlier, I put a lot of tips there. I got on my YouTube channel for Lot Pop. If you just look at Lot Pop Inc., you subscribe there. There's over 250 video tips. At least once a week, I'm doing video tips there. But yeah, those video tips typically come off of my Facebook Live. I'll do a Facebook Live. So Facebook, I'm all over LinkedIn and Facebook are the two major ones. And then the YouTube channel has a ton of free content. Even our website, lotpop.com, that content's there. But you can subscribe to the YouTube channel or Facebook and get notified there.
Awesome. Jason, thank you so much. Appreciate your time.
Hey, no problem. Thank you, guys.
Thank you for joining us today. Hope this episode inspired you to take positive action. Remember to subscribe so you get each episode the day it comes out. And we would love your help spreading the word. Leave us a review and share this podcast with your dealer friends. Dealers helping dealers learn and grow together.